How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for August 17, 2018. Here's a snapshot of the positions held by the institutions. And so let's take a look at gold and see what the institutions have been up to. So let's take a look here. So if we take a look at shorts, we can see that the institutions have been steadily increasing their short positions all the way from 72,000 to the highs of 215,000, and we can see that their positions are very aggressive right now, okay? And that comes as price was consolidating right here on the weekly chart, just about to push to the downside. Now, we've been saying, or I've been saying ever since price was up here, that we are to be expecting a move down. And I think a further move is going to be expected like this. We are reacting right now to this monthly bullish engulf. That's why we're getting that bullish momentum to the upside. And if you look at the US dollar and the euro, we can also see that there's some pullbacks taking place there as well. So on the long side, we see a slight increase from 208 to 211,000, which is not much to be worried about because this is the aggressive position right here. Very aggressive, and this is just a little bit of hedging as we see price preparing for this move to the upside. Bottom line is, if you take a look here, it's 50-50, but coloration of the cells dictates bearishness. I'm expecting a further move to the downside. Am I looking to take any trades on this? Not really, because I mean, if price was to take its time and eventually get up here, this could be a nice shorting opportunity, but I'd only take it as a momentum shift happening off of that zone there. Okay, let's take a look at oil. So oil starting that little pullback, the trend line has been broken. Now we have a test of this weekly area of demand taking place. And if you take a look at the long positions, they're still sitting at 89%. If you look at longs, a lot of longs have been closed out for profit taking as price was consolidating here. And shorts are still cooled off, so nothing important to see here. I do think we're still going to get a drop like this, simply because if you look at the US CAD, the CAD's going to be getting a lot weaker, at least from how I see it. And I think that's going to bring this one down. Once this zone gets taken out here, I mean, this is already tested here, so it's going to be clear sailing. First test was here of the monthly area, so it could be even further. And then we'll be testing that trend line. Probably get a bounce from there, but you know, first we need this area to get taken out first, let price drop a little bit lower, and then we'll see what happens when price gets there. But right now, no possible trading opportunities on oil. Alright, let's take a look at the US dollar. So the dollar, we got a big push to the upside, breaking through this weekly area of supply, and what happens? The institutions increase their long positions. Okay, well, that's what it would take to cause price to move to the upside. All throughout here, momentum was shifting, it was slowing down, and all of a sudden they came in and jacked up their long positions, causing a big increase in price right through the weekly area of supply. And now we also see an increase in shorts, and I think that is just a little bit of hedging as we see this decline in price down towards that weekly area of demand that we now have. Okay, bottom line is coloration of the cells is green, so we do have a bullish bias in place, and I think we're going to be seeing more highs on the US dollar in the days and weeks to come. Alright, let's take a look at the Aussie. So Aussie, what do we see here? So price drops, so we also see an increase in longs as that takes place, and a slight increase in shorts. So the slight increase in shorts causes this, and an increase in longs, reaction from the demand imbalance here, causing price to move to the upside. Remember, we still have a monthly area of demand in control. Once tested deeper, and we can get a definite move to the upside like this. The opposing zone is tested here. Very possible that we get a further move up like that. Well, you can see the demand coming in to play right now, and I think it has a lot to do with what the institutions were starting off over here. Bottom line is coloration of the cells are red and net positions in the negative. So I do think we're going to see more downside eventually, but we would need to see this area be taken out. Once this area gets taken out, the fact that this has already been tested a few times, you get this out and this will free fall down like that. Okay, Alright, so let's take a look at US CAD. So the US CAD, we see longs decreasing and shorts decreasing, and that comes as price was rallying up from the weekly area of demand. Okay, so with this one, we have that monthly area of supply, price drops from it, hits the weekly area of demand, and the institutions laying off on their aggressiveness with their longs. Look at the coloration of the cells, went from bullish to neutral. Okay, so what does that tell me? Now's not a good time to trade. Alright, so I'm not looking to open up any trades on this just yet. Okay, they're neutral, I'm neutral. US Swiss franc, what do we see? So not much change with long positions, not much change with short positions. Bottom line is 90% geared to the upside and more consolidation. So not much changing with their positions, still bullish, but we would need to see a lot of areas be taken out first before that momentum continues to the upside. So let's take a look at the euro. Price drops right through that weekly area of demand, and look at this massive increase in shorts from 167 to 190,000, right? Now I've been saying I'm learning from this situation because I want to see what the institutions are going to do with this overexposure to the long side. And in fact, look what happens. Price drops and they increase longs. Now there's a couple of reasons why they could have done that. But this increase in longs, we're seeing this bullish reaction slowly coming into play on the charts. Could be some hedging, okay? Or it could be to stabilize price as they were adding so many of those short positions. Okay, so let's go to the next one. We have pound. Price drops again through a weekly area of demand, and longs increase massively. So massive that it becomes aggressive, okay, from 43,000 to 60,000. And their increase in shorts is also pretty large, from 102 to 120. Now look at this. Look how many weeks in a row. Increase, massively increasing on their shorts. Price has been dropping. I think there's a little bit more to go until we get down to this monthly area of demand, where I think we'll see some kind of a reaction to the upside from there. But if you look at the coloration of the cells, it's somewhat neutral, even though we've got net positions that are negative. And that makes sense. We shouldn't be shorting right now, considering the fact that they are adding so much to their long. So doing some hedging, preparing for a move, now's not a good time to get in. A move up like this, momentum shift off of there, that would be a very good decision. US dollar, Japanese yen, what do we see? So price consolidates right at the weekly area of demand. The institutions take some of their longs off, and they increase some shorts. Not much to see here. Coloration of the cells slowly going from bullish, entering into neutral territory. Slightly. Not by a lot, but slightly. So same thing, waiting for momentum to shift to the upside, and then we'll be interested in getting in some long positions. Right now, a little bit more neutral. So we're seeing this very same theme happening with a lot of them, right? We're seeing a more neutral sentiment with the institutions. And that's for good reason, because if you look at this situation, things are just in the process of setting up. They aren't quite ready for the moves. So it's good that the indication is telling us to sit on the sidelines for the time being. Shorts, aggressive. Longs, cooled off. Okay, bottom line sentiment is bearish. And as this big huge drop in price happens, a big increase in shorts, which causes the drop. Now we're seeing a little bit more momentum to the upside, right towards a weekly area of supply. Bottom line is the institutions are bearish, so we are looking for opportunities to get in short. And that's pretty much it, ladies and gents. We have some data this week. Let me see, do we have some data this week? I gotta double check. I don't think there's anything of interest. No, nothing of interest. So that's pretty much it. Hope you enjoyed this CFTC report. Hope you'll use it to make your trading better. And until next time, have yourself a good one.